Hello guys, this is the first recording of the day, and this is London started something like 1 hour ago, and all eyes are going to be today on the European Central Bank with the press conference that's about to follow the ECB interest rate decision. Now, we had yesterday the FOMC, and nothing really moved in the markets except of a spike in the sell-off of the US dollar, but then that one has been reversed completely in the meantime. The reason for the spike was that the FOMC statement, we had only the statement yesterday, and the FOMC statement actually had a small downgrade for the US economy from moderate recovery. Now the members of the committee see a modest recovery. Now, what's the difference between the modest and moderate? It remains to be seen, but market seems to be interpreted them that at that very moment yesterday as being a downgrade, a slight downgrade for the pair. Looking at the market here, you see the euro dollar 132.34, 33 after hitting a high in 133.40 area. Euro Great Britain pound, sorry for that. Euro Great Britain pound punished 87.20 after going as high as 87.60 yesterday, and Aussie remaining actually at the same levels, 89.70 area. And because Aussie stays at the same level and euro corrects lower, that means that the euro Australian dollar goes back more than 130 pips out of the previous highs established yesterday. Now, this recording today will deal with the euro dollar, and the reason is it is being called a contracting triangle an expanding triangle on the euro dollar, and the expanding triangle deals. It is to be found out right here. So this is the expanding triangle, and this should be labeled like an A wave. Let me make A of black, something like this. So this is A here, so A, then a B wave, so then a C wave to the downside, D, so A, B, C, D, and E wave here, and there you go. This is your contracting triangle. Not only that we have a contracting triangle, but after that we had a new high. Now, what does it mean? Well, first of all, not contracting triangle. I'm just saying contracting triangle when I should refer to this as an expanding triangle. And expanding triangles are extremely rare formations. That's the most important part. And after that, they are coming only in specific situations. For example, either at the end of the fourth wave or at the end of a B wave. They may come at the end of a complex form of correction, but this is not mandatory. This is not common. So either fourth wave or an X wave. Well, if this is an expanding triangle and it is extremely rare, then based on that, I would say that this just covers a third wave of a higher degree that ended here, and that would be a fourth wave of the same degree, and there you go, most likely the fifth wave here. So 1, 2, 3, 4, 5. Well, if this is 1, 2, 3, 4, 5, then most likely we are coming back to a second wave here, and the first wave can be only this one for this move that started actually here. Okay, so started here and here. Just based on that expanding triangle, we are looking at a nice impulsive move. But let's see if this impulsive move respects the rules of an impulsive move. Well, in an impulsive move, at least one wave needs to be extended. So let's take a Fibonacci expansion and go from the lows here to the highs here of wave 1, like this. So this is the first wave. Let's say that this is the first wave here, and this is the end of the second wave. And at least one wave needs to be extended. And this one wave that needs to be extended, so it is 1, 2, 3, 4, 5. But as you can see, the 161.8 level, it is definitely not done. And if this is not done, then this is not an impulsive move, even though it looks like one. Well, if this is not an impulsive move, then what it is? Well, it might be very well a correction, and that brings, let me delete this once, that brings us back to the contracting triangle. And from my point of view, these lows are coming, these highs over here are coming as a possible correction move, with this being the first correction. And now we are looking for the second correction. But the first correction, let's say to end here with a wave 1. Let me make it of this degree. And I will label this as an ABC, but as you can see, we have a new low here. So we have a series of 3 lows, lower low, lower low, and lower low. And until this channel breaks, so let me take this channel here. The equidistant channel. So until this channel breaks, okay, like this, we are looking for, see, this is the channel that I'm looking for, something like this, and then we are looking for this to be a possible correction, and this to be a next wave of a high degree. So 1, then the first correction, then a next wave, let's say. So next wave, let's say 12, and out of this degree, and red, and that would be the first one out of this degree. So 1, and then the X wave, and here I will label these ones only as waves out of this degree, like W, X, Y, then XX, and then the Z wave. And there you go, you have, this is the first correction. So this is the first correction. And based on that, so this is the first correction, let me make it 10 and black. And based on that, basically we are looking for the second correction to come. And this is the second correction to come. And this second correction, if you change the color for this one, this second correction should be smaller or lower than this one. Look for 61.8, something like this for the second correction. And let's say that the 100% level would be 131.21, which I don't think that is going to be the case. But I will try to buy this 132 area, let's say, for this second type of correction. And this involves an X wave here out of this degree, and this X wave here is being called an intervening X wave. So we have an intervening X wave, wave 1, intervening X wave, and then we are looking for the second wave to end either here, 32, or here. It remains to be seen. What such a scenario means, it means that we are looking for a powerful move to the upside for the third wave to come, and that move should take the 137 level. It remains to be seen. I didn't label this structure for the X wave. We'll do it some other time, but this is a corrective move. It is channeling too well, and we don't have an extended wave, so it remains to be seen. Until next time, stay safe from the markets. Bye bye.